Welcome back. Let's talk about the markets. Rohit Srivastava, founder and strategist at Indiacharts.com, is with us on the show now. Rohit, I know in the evening today you are going to be talking on one of the social media platforms about investing at 18,500. How did we get here and where do we go from here? So why don't you give us a sneak peek, right? How do you invest at current levels? What's the approach and where are we headed?
Yeah, that Spaces is tomorrow evening.
Oh, tomorrow evening.
Yeah. How we think about this is, I think one thing that people really need to come to terms with, because I still hear a lot of negativity, people willing to maybe sell this market at these levels. And a lot of that specifically on social media or YouTube. My sense is that what we have seen now from a pure technical perspective, from the lows of March, we call it a 5-wave advance, which simply means that the larger trend has very, very clearly turned from down to up. Now that sets the course for the rest of the year, which means that, for the rest of 2023, we feel very confident that the market heads higher. And that means that investors in general need to be allocated to this market. They can think of which sectors, which levels, when to buy. But in general, because there's a lot of rotation, there's always some sector that is down, which may present an opportunity to, enter. So you really have to focus down to that level in terms of making those entries. But I think long-term investors need to stay invested for the rest of this year for, meaningful returns. That is my first thought. And part of that risk is also reflected pretty well in two macro factors that you can always watch, which is bond yields and the currency market. Now, when I say bond yields and currency market, most people start looking at US bond yields and US currency markets. But sometimes our market has a lead signal. And I think the 10-year GSEC in India has given a lead signal because the interest rates on that have fallen from almost 7.8% to 7% now. And that decline in interest rates is a sign that, the trend has changed because the breakdown point was somewhere around 7.25 from where the trend has reversed. Now, the next you'll probably watch for, okay, when does it fall below 7, which should happen, when the next leg down for the US bond yields also kicks in. So that's one sign that we already have. The second one, like I mentioned, is the currency. You look at the USD INR, it made a fourth attempt to get past that 83 mark. And it's failed 3 times before. This is the 4th time it has failed to do so, which again is indicative that this is a topping process at close to 83. In a sense, RBI has managed to contain further weakness in the rupee, I would think. And that means it probably strengthens back towards 81 or 80 in the short term. And if it breaks that, it would also give a similar confirmation that we've already seen, say, from the bond market. So these are two macro signals people should watch and, keep it to help them stay on the right side of what equity is also doing. Because if there's no risk in those markets, then it most probably doesn't percolate down to the equity market as well. Now, shorter term, the thing to watch out for is when we get close to 19,000, because we've had, a couple of tops there, first time at 18,600 in October 21, then at 18,800. And if we draw a trend line of those highs, it will come to slightly above 19,000, maybe 19,050 to 19,100. So somewhere there, we could face the first resistance to this rally and possibly a pullback. So we'll watch for that, whether the pullback is small or big. It's hard to judge right now, but we'll at least watch that level on the way up. And if we do get that pullback from there, it will again be a good dip to, re-enter at that point of time. So that's possibly only for short-term traders, to watch whether this can be an extended move beyond 90,000 or we'll stop there, consolidate for a while, which is the ideal thing because, you've had so much resistance there that before you take it out, you do see some consolidation below 19,000. So that's something we'll watch out for, I think, in the later part of June. But right now, I think there's still steam enough for us to do another 200-300 points, 18,800 to 18,900 in the coming weeks before we pause. And within all of that, then you start focusing on sectors, right? So which sectors do you look at? I've, of course, broadly highlighted the long-term sectors we like, which is defense, capital goods, power, metals, all of them. But right now, I think in rotation, where have we seen the dips? So we've seen a recent dip, sharp dip, in fact, in pharma. We have seen one in the power stocks that were pulling back, and we've also seen that in the metal space. So I think these provide us good risk-reward opportunities in terms of new entries because they've pulled back and are at the lower end of their trading ranges. So therefore, these would be sectors that you would actually start looking at from taking, fresh entries into the next move higher. Maybe you get some outperformance as well relative to the Nifty.
Okay, got that. Rohit, thanks a lot for joining us. What about the Nifty Bank? It's hit a record high today. Is this a space that, you feel also has steam left, like you were talking about? And then in that context, what is the kind of target that we can see on just the Nifty Bank?
So shorter term, I would think 45,680 is the next level where we see some resistance. And again, the same expectation will be consolidate there before we go higher, which we'll watch out for. So 45,680 still gives us another 500, 600 points more, I think, on the upside to play out. But along with Bank Nifty, you should also highlight that we are seeing new all-time highs in the Nifty Midcap 100. The broad market is actually participating in India much more than you see in the US, where they are actually complaining that the broad market is not participating. Here, we actually have broad market participation and strength, which is a very, very good sign. And it also signals that you're going to see outperformance in the mid and small cap segments relative to the market. So people who are looking for that outperformance or high beta, you'd actually want to be invested now in mid and small caps, because the deep correction you saw in many individual names over the last 1.5 years is also looking complete. And that means the risk is very low in being in the mid and small cap space.
Well, globally, it's some of these NASDAQ companies which are doing exceedingly well, all the ones which are related to AI. So on Thursday, it was NVIDIA. On Friday, there was this company called Marvell Technology, Marvell.
Okay.
So that's the distinction versus the Marvell that we know. And that stock climbed up 32% because they said that their profits this year is going to be double of what they did last year. So the street is really latching on to some of these AI-related stocks that they believe could be, the big winner. And the NASDAQ has done exceedingly well, compared to, say, the Dow and the S&P 500 and the broader markets. Rohit, so since you spoke about how the mid-caps have done very well in India and the mid-cap index has hit an all-time high today, there's one segment I wanted to ask you about. That's capital goods. Now, everyone's bullish about capital goods, but it's a very wide space. You've got defense there. You've got large companies like L&T, Siemens, ABB. You've got infrastructure companies across market capitalization. Any ideas that you could suggest which could do well in this broad capital goods space, domestic capital goods sector?
So within all of that, I've just stuck with the big names. Okay. So the big names meaning I've liked, say, for example, Siemens and ABB on the private sector capital goods side. Larsen could be an odd guy, but I just have a personal preference with the ABB and Siemens, maybe because they did very well in 2000-2008 cycle as well. So I've probably stuck to that. And in the defense space, I think I only started to talk about Hindustan Aeronautics maybe more than a year ago. But later, I think there are a couple of other names that have done well and are holding on. And what I mean by that is not going below, say, the 50-week average for almost 2 years. So they keep pulling back, taking support, heading higher. So that is the relative strength we see in a couple of these stocks, which include names like Garden Reach, BDL. And also, you're seeing right now a lot of action in JRL, right? So I think these are sufficient. If you just have 3-4 of the top names in both defense and capital goods, you sort of covered the best part of the sector.
Okay, got that, Rohit. It's been a pleasure to have you on the show as always. So thank you for taking out the time and speaking to us today. That's Rohit Srivastava, bullish as ever, telling us another 2-3 points. There's definitely enough steam for that on the Nifty right now. But with that, it is time for a short break. When we come back, there's lots more market action, so stay with us.